Good morning traders, Andrew Curry here, and if you're new to this channel, give me a like and subscribe, and if you go to my website you can sign up to my free trading newsletter. And I say good morning because I'm looking at this chart now on the morning, and I have my morning coffee here with me, so if you have a coffee too, let's together. I love coffee. What I want to have a look at today here on the AUDCAD is we have a cipher pattern, one of the Fibonacci ratio patterns. If we have a look here, and I'm going to do this really quickly, so if you want to rewind the video just to double check a few things, because I'm going to go through this really quickly. But we have here, there we go, that would be our X to A leg, it's the 50%, okay, which means it would be a valid cipher. Then we have an extension, which hits the 127, which means we have a valid X to A leg, a valid A to B leg, and a valid B to C leg now. And the decompletion point would be the 78.6% retracement of X to A, which would be, of course, here. Because I already had the entry, 2 targets, and stop loss in place. Okay, so we now have this valid cipher pattern. So I'm just going to quickly draw in the cipher. There we go. And again to there, to our entry here. Now, one of the things you may notice here with this particular cipher is we have a lovely X to A leg. Lovely in the sense it's easy to recognize. Big run of strong bearish candles there. Pure red, no green. And we almost have the same with our A to B leg. Almost all green, some strong candles in there, and so on. And look at our B to C leg. Again, mostly red candles. We have really good indicators this is a good X to A, A to B, B to C leg. But what we have here is a choppiness. Okay? We don't quite have this run of continuous, more or less continuous green candles, which leads to our entry. And of course, as you can see, this cipher was a losing cipher. It hit the stop loss. Now, traditionally you want to put your stop loss at a place where you say, okay, my prediction is now invalidated. These patterns are known as Fibonacci consolidation patterns, although it's technically not a consolidation pattern with a cipher because it pushes past the A point. But really, once it breaks the X point, the pattern has been invalidated. And so the X point is a logical place to put your stop loss, but you likely want to put it a little bit further just in case it spikes up and so on. And so what I do here is to maintain consistency. There are many ways in which you can calculate to put a stop loss a little bit higher. But what I do with Fibonacci patterns here is rather than just, oh, well, I'll put it a little bit up there, you know, so that I can maintain consistency in what I do, I put it at, there we go. You can't really see the number very well, but it's a 113 extension, 1.13 extension C to X. Now, in particular, I highlight this cipher pattern because this is quite an interesting one because of what happened and the fact that it lost. And you might wonder, why are we looking at losing ciphers? You know, why not look at the ones that hit target 1 and then target 2? Well, we tend to look, or at least I certainly find I do, we look at these patterns in isolation. What I mean by that is when you're looking for a pattern, you're looking for a pattern. You're not looking for, you know, what other things, hitting structure points and all sorts of things like that. You might be if it's part of your plan, but on the whole, your eyes are sort of looking for, in this case, a cipher pattern rather than looking at what else the market is doing. There's nothing wrong with looking at the cipher alone and trying therefore to avoid analysis paralysis by looking at everything and, you know, finding it hard to push the button because you're just looking at too many things. Well, what if this and what if that? That might indicate something. That can be overwhelming and that's not good. So what I want to look at in particular here is what happened just before the cipher. We have here a support and resistance point. We know that the market tends to reverse at places where we have previously seen a reversal. So again, quickly, let's have a look. Where's the arrow? Yeah, so the market, in this case, was traveling bearish and hit this point. And we see this throughout the markets. Travels bearish for a bit, reverses at this point. Sometime later, comes to that point again, and it reverses at the same point, giving us, in this case, a support level, right? And we also see, that this can work the other way, right? Providing what we call resistance. So the resistance, because it's reversed at this point previously, even though it reversed in the other direction, we will see a reversal. And places where we've seen a double reversal, what I mean by that is not occurring twice, as in it's come from double sides, like this, would be really strong indicators of the presence of a support and resistance level, because it's demonstrated support and resistance. So what happened here is, if we just ignore to the right of the chart for the moment, it hit here and reversed, and then it tried again and failed. So this is a good indication of a support level. It traced up and ultimately to this high point, and then when it went through again, when it gave us what became our X to A leg, I'll just draw that slightly to the side because there, so you can see it easier. It went straight through this level in this case, okay? But then when it gave us what became our A to B leg, look at where the momentum stopped. And it was quite strong momentum too. Look at that strong green candle. It reversed at where we reversed previously. And this is, again, this is a good indication that this is a very strong level. So then, of course, it gives us I'll draw it just slightly to the side, as you can see for clarity. It gave us what became we have our X to A, our A to B, our B to C leg. But then when it went to give us our C to D leg, it was very choppy. And one of the problems you can have with this is you can start thinking, is this really a valid cipher that I'm seeing here? But am I drawing this right? Is it valid because some of these will go even worse than this, and you'll have all sorts. Imagine if I look at this on a lower time frame. Let's do it for a second. Yeah, look at how choppy that is there. Yeah, so it looks even worse on a lower time frame. So here we go again. Get my chart back. Yeah, so it looks even worse on a lower time frame. But interestingly enough, look at what actually happened. So start here. We have our reversal on towards, if it completes, it will be our D leg. It spikes up to here, and then we get a reversal. In fact, look, a strong reversal. Look at that candle. It went the price went all the way up here in this 1 hour period and was smacked back down again. It was rejected, and it tried again. Up, didn't quite get as far as the resistance level, and down. And so what we saw was a reversal. And this is the choppiness. It hit this level here, this level of relatively recent structure, and reversed. And then it did it again. Hit here and was rejected. Wasn't quite rejected as far though, which indicates, well, what we actually have really there, I won't draw it on because it'll just make the chart messier. What we really have there is a triangle pattern. It hit, was rejected, reversed, hit again, but did not reverse with quite the same momentum. An indication of a growing bullish pressure. And so sure enough, it smashed through. So this kind of choppiness is a consequence of the fact that we have recent structure which has shown the presence of a support and resistance level. Okay, so if I draw this on, this is structure indication here, this indicating it worked the other way around, strong indicators of support and resistance level. Sure enough, that followed through to here, hence we see this choppiness. But this choppiness showed us something. Okay, after it was choppy and it got to the blue line, it more or less, in fact, yes, it did. It instantly reversed. But then what happened was, after reversing, look at the point at which it struggled to move in the direction we want, which is towards the bearish direction, towards our target. It hit support. It hit this level and struggled and started in the opposite direction. But sure enough, the market, with quite a run of red candles here, where did it struggle? Let's just take that most recent arrow off. Look. Oh my goodness, it struggled at the same level again in the opposite direction. And so sure enough, it went again in the wrong direction with quite a strong, look, continuous green candles, some higher close candles in there, and hit the stop. So ultimately we had a losing cipher pattern. But were there indicators of perhaps, I say perhaps, you have to test this on each pair that you trade cipher patterns or whatever pattern it is on, okay? But did this choppiness on the way down indicate that this was more likely? But it might be worth looking at your losing ciphers and other Fibonacci patterns to see if there is a pattern, no pun intended, with the failures and the choppiness of the pattern overall.